please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon, hello and welcome. You're watching Halftime Report. I'm Sumaira Abdi and with me is Nigel D'Souza. Hi Nigel, good afternoon to you. And well, it's been a tough day of trade today. Pretty much in line actually with the way the US markets had closed off. So we're down about 0.7% almost on the frontline indices. The Sensex is seeing a cut of about 200 odd points. In fact, it looks like the 36,000 mark may be in jeopardy, as could the 11,000 mark on the Nifty. So for now, it looks tough. I mean, you know, IT, banking, finance, you name it. Pretty much nothing is having a good day.
That's right, Sumaira. But one, positive. I'm struggling to search for positives, but at least that cut has been stopped. At around 10:30 odd, we were down around 75, 80 points. So at least some kind of solace is coming back to the markets. The advanced decline ratio as well. At one point of time, we had close to around 5 stocks that were declining for only one stock that was advancing. So those lines, at least they're getting a little closer together, because as we speak, in fact, we have around 3.5 stocks that are declining for around one stock that's advancing. Well, let's see. Interesting out of trade coming up. We should be seeing numbers coming in from TVS Motors as well. With our first company that we have with us, Balaji Amines. That stock is on our radar. Remember, they posted a rather strong set of numbers in the third quarter. There has been a 22% growth in terms of revenues led by the Amines division, and margins as well have improved in this past quarter. We have with us Ms. Reddy, the joint MD, who joins us to detail these numbers. Hi, Mr. Reddy. Thanks so much, sir, for joining in, and congratulations. You've generated a lot of wealth for your investors in the last 1 year. Let's focus on your top line first. 9 months down, you've done around 620 crores. I remember you telling us 850 crores is what you want to do for FY18. So that's looking possible, isn't it? And what about FY19? What kind of a revenue number are you looking at there? And if you could give us a sense as well of the current capacity utilization levels.
Good afternoon, Mr. Naibal. Yes, you're right. We are on the right path to reach 850 crores for this financial year ending. And coming year, we'll be doing around 1,000 to 1,050 crores. And as regards the capacities, yes, we are doing 90% capacities, all the plants. And there are the 2 plants which will come in the stream, that is the Morpholin and Acetonitrile. We are just waiting for the one NOC, which we are expecting by next month, first week, probably by end of February, those 2 plants will come in the stream. And apart from this, as we declared earlier, we are going for a mega project. That is about 90 acres land as given by the government of Maharashtra. That land digging will take place in the next financial year, where we are going to take, I can tell few of the products which we are going to take up. That is like one is monoisopropylamine, and second is MIBK, which is methyl isobutyl ketone, and third one is diphenylamine. Most of these products are nobody is making in the country. We'll be the first or second people to make these products, and these products have got good demand in the country, like in the pharma industry, agro industry, rubber cleaning chemical, and dyes and textiles. So with this, we are expecting the coming 2-3 years there will be good growth will be there for the company.
Mr. Reddy, good afternoon, and congratulations, sir, on a good quarter. This new plant that you're proposing to set up, which you're talking about, what might be the opportunity here? I mean, over the next, say, 2 to 3 years, like you say, what might it add to your top line? And the second question I want to know is, why have your gross margins been under so much pressure this time?
These gross margins, because of the prices have gone up. This quarter, we have seen little pressure on the raw material prices. That has given, in spite of that, we have done well, because the finance cost has come down. That has supported and giving the good numbers. If you compare the year-on-year basis for last 9 months and this 9 months, there is an improvement of 29% growth in the profit before tax. That we have stood about 126 crores as against 97 crores for the earlier 9 months. So as regards this new expansions, yes, we will be investing around 300 crores in the first phase, and maybe by 2021 it will start giving, in the first half maybe around 300 to 400 crores will add into the top line.
Okay, all right. Mr. Reddy, getting back to the margin front, if you could help us out, what kind of a margin number can we look at currently? Gross margins, yes, there's some contraction there, but in terms of EBITDA margins, you're doing upward of around 20 to 23%. Sustainable?
Yes, this EBITDA margins I was telling in earlier also, this minimum 18% should be there because we are going to become debt free. The finance cost will be coming down. And all the plants are running very efficiently at higher capacities, what we assumed. So there's a reason we expect minimum 18 to 22% EBITDA margins we should maintain. Even the products which we are planning, which are coming up in the coming years also, we should see these 20% of the EBITDA margins.
20% is what we could work with, sir. Next year, you're talking about more than 1,000 crores of revenues and you're talking about more than 20% of margins. We're working with those numbers, correct?
You are right, Mr. Nabil.
Sir, you had earmarked some 50-60 crores, I think, for the acquisition of a specialty chemicals company. Has there been any headway on that?
Yeah, that is in actually full swing. I'm happy to say that by October that will come into the production and probably about 100 crores revenues will add in the coming year. This is my expectation. That is in the full swing. The products also
very... So you have already acquired the company, is it?
Yeah, we have acquired and part of the money is already poured into and the work is going on full swing to produce the very niche products like EDA, ethylene diamine and the piperazine, which are also again first time in the country. Nobody is making those products in the country from the base raw material. So this has got very good demand in the agrochemical.
So you're debt free now, right? After this acquisition,
it will become. See, now we have a small debt is about 19-20 crores, which will become free by June 19. It will become free.
Okay, all right. Final question, sir. Your stock has been such a big outperformer. You know, if you just pull up the last 1 year chart, we want to track the sectors where you have exposure. If you could help us out with some of your key clients, the key sectors, break it up for us, right? Who are your customers?
Instead of saying the names of the companies, I would like to say the sectors.
Yeah,
we are. Majority of a basket goes about 55% going into the pharma and API industry, around 28 to 30% going into the agro industry, which these both are into the major chunk of our contribution, which are actually having more than 17-18% growth year-on-year basis.
But if pharma is going under pressure, there would be some pressure on you as well, or do you think demand is strong enough?
No, pharma, I'm talking about APIs because our products goes which is a very basic essential product.
Okay.
Like it is required, like as I said earlier, if you take the anti-diabetic, that is the metformin, which is the major, there's a growth. I don't see that there's any pressure on that product, on that sector.
Okay.
And many things are either you make or not, you need these solvents and intermediates to minimum base. So we have not seen any major pressure, what you said.
Okay. All right, Mr. Reddy, you're sounding confident. You're sounding that, in fact, the demand's going to be there for your products. So, investors will be hoping the same. Thanks so much for joining in. Numbers look quite impressive. First 9 months have been quite good. The stock has run up, though, a considerable bit. Got to be worse, actually, for our markets. We are moving lower as we speak. A couple of these stocks are seeing some selling pressure. ONGC, that was holding in the green. That's moved into the red. GAIL as well has come off the high point of the day. And I think HUL as well has taken a bit of a downtake. So let's pull up the intraday chart over there. That's ONGC. It's come off a tad bit. Get HUL as well up for you on the screen. So we are at the low point of the day. We were holding with a cut of around 70-75 points. Now we're down close to around 90 points.
Nigel, this Emami's conference call has just concluded. And I think we might want to pull up the stock and check it's under a bit more pressure. Among some of the things that the management has highlighted, they're saying that the headroom for margin expansion is limited from here. And I think you can see that reaction over there. As well on distribution, they're saying dependence on wholesale, which stands at 42%, continues to remain a challenge for the company. So these are just some of the takeaways from that conference call, and we'll have Mangalam joining us in just a bit, who'll add a bit more color to this. But I think the street's not taking too well to it.
Okay, all right then. So that's some red on the screen, but let's try to pull up some green and in fact cheer things are up for you. We have a new debut today. In fact, Amber Enterprises, that stock has listed at a massive premium. To understand what's going on there, what's the outlook going ahead, we have Mr. Jaspir Singh, the chairman and CEO of the company, who joins us. Hi, Mr. Singh. Thanks so much, sir, for joining in. A basic detail first. You have done this IPO. So how much of debt will be retired from these IPO proceeds? And how much of debt will you be left with, if at all any debt?
So, see, current term loan facilities will be completely given away because we have about 240 odd crore of long-term debt. Then remaining working capital cycle, which right now we have almost about another 250 odd crore. So out of that, so there were total issue size is 600, out of which 475 is primary, and 75 is for general corporate purpose. 400 crores goes into the company for repaying the debt. So we'll be almost debt-free. We'll be left with a very small working capital limits after this.
Mr. Singh, good afternoon and congratulations. Your margins have shown improvement in the first half of the year. Are these 9% levels sustainable?
Yeah, certainly, this is sustainable levels of margins which we are showing right now. So H1 has been very positive. We've done about 27% up in the revenue, and we've done 27 crore of PAT, which was actually almost similar PAT of the complete year last year. So there's the same trend will continue. So H1 normally historically creates, contributes about 42%, 43% of our revenues. So we look forward for the same kind of margins as well as the revenue growth.
Well, Mr. Singh, let's take that point forward then. You've been, you've been doing a 17% CAGR over the last few years in terms of a top line growth. Should we expect the same this year? What about FY19? How does that look?
So see, if you historically see the trend, the industry has grown by about 11.7%, and we've done about 18%. So we will continue to outnumber the industry because of our wallet share in the customers keep on increasing, and there are very other factors which we do cross-selling of other products into the same customer category also, and new customers are being added. So if you see H1 also, industry has grown by about 12.5%, and we've done about 27% jump. We see the similar kind of trend. I see that industries will continue to grow by about 12 to 13%, and we should maintain the numbers which we are in FY19 also.
Mr. Singh, keeping it simple, you'll do 18% this year, right, in terms of a growth. What about FY19?
Yeah, it's a function of market growth. If the industry is growing at 12, 12.5, 13%, we will look forward for maintaining that number.
Mr. Singh, two questions. What's the current ODM and the OEM mix? And also, some analysts say that your high client concentration as a risk with 90% revenues coming in from just the top 10 clients. Your thoughts on that?
See, we are serving 8 out of top 10 brands in the country right now, and more customers are being added. 7-8 years back, if you see the history, we used to bank on one customer to a tune of 76%. Today, that customer is as low as 9% concentration. So none of the customers, we have a strategy that we should not be banking on more than 20-22% on a single customer. So that is where the customer concentration is. It's very pretty diversified customer concentration. With more clients adding in the list, the concentration is further getting diluted. So that's very positive on the customer concentration. And ODM part contributes today at about 72%. Remaining is OEM as of now.
Oh, interesting. So you expect the mix to sustain, or are you looking to go up on the ODM side even further from that 70-odd%?
No, we are increasing our ODM model. So we historically started as OEM, and today we have reached to a 72 numbers. Our endeavor is to definitely increase the ODM part and giving more solutions, offering complete solutions to the customers.
Mr. Singh, any reason that your capacity utilization is so low at 50%?
So see, large capex which we have done in 5-6 years, that was for geography expansion and product expansion. Now we are sitting on a very big operating leverage to cash on, and that is where we see very positive things to happen, because if you see the results of H1 only, we've not done, so any capex now is on the declining side. There's no large capex coming in, whereas sales is increasing.